Ethereum Classic over the past day or two, and the action is even more bullish across other cryptos. Looks like Solana is up 5-6%. We got a few other cryptos that are up even more than that. I think we got Stellar Lumens up. So we're seeing some bullishness across the crypto sector, but I'm not fully convinced yet that we are done with our correction, our crash. And really, it looks like more of a corrective bounce. The same applies even in equities markets, where I'm not completely convinced we're done with the crash there either. So when we look at our short-term 2-hour chart, we'll see that Ethereum Classic bottomed on January 22nd, right around the 21.29 mark. Still a few pennies above the $21 support that we're going to look at in the big picture in just a second. And we see that we might have a 1, 2, 3, 4, 5 wave pattern up, but it's not impulse because the shape, at best, it's a leading diagonal. So really, if you had to, if I were a betting man, I would bet that we're going to have a bit lower to go before we're done. How much lower? Well, we're going to look at that in a second. So if you would like to follow along, of course, please check out the description. I'm going to have a link to this very chart in that description. So please feel free to take a look at that. Our primary pattern was our, is red. So the green is still technically valid. I think I said we'd have to break 2106 for the red to become primary. Well, we just barely missed it. We barely touched it. But in my opinion, because it's corrective bounce, I have shifted to the red as our primary. And the difference is that the green pattern sees this as an A, a B, and a C correction, and that we're done. And by many of the Fibonacci extension numbers, assuming that this is a 1, 2 here, we should be done. This is as low as we should go. However, like I mentioned, typically you expect to see a 1.0 extension for the C wave based on the A and the B. So based on this A and the B, the C should be equally deep as our A wave. And if that were to be the case, then we've got a bit lower to go, probably close to $14, somewhere around there would be a strong zone of retracement. And there's actually confluence there because based on this larger impulsive pattern, the pullback, the 61.8% retrace of that, which is typical for wave 2, also falls right in that ballpark. So there's quite a bit of Fibonacci confluence there, which leads me to believe that red is our primary, but green is still on the chart because it hasn't really invalidated yet. Ultimately, there's not much difference. Red is, again, same thing. You have an A and a B and a C. It's just calling for a slightly deeper C wave. And then we're done with the correction. We're going to come right back. These targets up here would lower slightly. But again, these are very approximate targets. Subwave 1 will be based on whatever we're seeing for the big first wave impulse here and the retrace we have, which, again, isn't complete yet. So we don't know exactly where the bottom is going to be. There is one much more bearish purple alternate pattern here. I don't see this as a very high likelihood at the moment. And this is saying that this entire drop here in December 3rd was actually the first wave of a much larger 5-wave pattern impulse down, or even a diagonal down, depends on how much we retrace. And that would mean that we're still going to go a bit lower in a 3rd wave before a big 4th wave bounce. That would look very corrective. You see an ABC pattern up, and then we would crash down well below probably $10. Could be deeper. I don't see that as being a high possibility right now. When we look at our MACD, we are oversold. We're seeing some divergences. And we've already hit a lot of significant Fibonacci numbers. And like I said, there is confluence at that $14, $15 range. I can't see us going any lower than that. So what's going to come next? Well, like I said, as long as we don't see a 5-wave impulse straight up, I expect a bit more downside. Whether that's going to happen right away or we bounce a little bit higher is yet to be seen. But as long as, again, we don't see a 1, 2, 3, 4, 5-wave pattern up, we're not out of the woods yet. So I would expect us to dip, and this applies to pretty much every other cryptocurrency. Bitcoin and Ethereum have quite a bit of downside left based on their charts. Doesn't necessarily mean that Ethereum Classic will crash as hard, but we are sitting right around $25, $26. Could go all the way into $14, $15. So that could take a chunk out of your account if you get a little too zealous and buy right away. So with that in mind, my plan is if it does get in the zone, I'm probably going to buy a tranche, and then I'll wait for another 5-wave bounce, a 3-wave pullback to buy the rest, depending on how deeply we dip and what the other cryptos are doing. Strategy might change. So that's a hint right there, guys. This is the time to start making your buying plan. We're much closer to the bottom than we are to the top. So now is not the time to panic and sell. If we break another major support, we could, but until Bitcoin and Ethereum give us more of a dire warning. I don't see that as a big possibility. As bearish as I have been in the short term with getting out of cryptos, calling for more downside, I still do believe that our long-term pattern is very much valid. There's no reason why it wouldn't be valid. As a matter of fact, I actually want to see Bitcoin and Ethereum crash a little bit lower. That way it'll hit our standard retracement point and we can be more convinced that this giant four-wave crash is behind us. I don't want this thing to last any longer than it has to. And as I mentioned, we do see this as a giant first wave, which means our correction is a second wave. And guess what the best wave to trade in Elliott wave trading is? The third wave. Elliott wave theory calls for the third wave to be the biggest and most powerful of all of your waves. So this subwave one here would be part of a much larger third wave, which I'm not going to project the height of at the moment, but it can be done. If I actually had to take a guess, well over $3,000. So let's not get ahead of ourselves. Need to get through this crash. Again, not sure how long it'll take, but we're much closer to the bottom than we are to the top that we were at. So it's time to start thinking about buying that dip. It's time to be greedy when others are fearful. So I'm going to have a lot of videos out on how to buy, the strategies, the allocations, all those things. Don't forget to subscribe so you don't miss any of those. And until next time, thank you for watching and happy trading.